Hi everyone, Chelsea here, your TA lady. I wanted to cover where to set stop losses because there's not a fixed percentage. It varies off of your risk management level. There's a lot of times where you can do a risk to reward ratio. It's like a 2-to-1 ratio to help make sure that your reward is more in favor to your risk. But what I like to do with stop losses is to draw your patterns, okay? Draw your patterns first because then you'll be able to identify potential where to go ahead and put potential stop losses. So, for example, if I'm drawing a pattern here, I see, okay, it's in like a rising wedge here. I can go ahead and I would put my stop loss below the pattern, okay, below the pattern. So you can always do your percentage too. One thing that I like to use is to kind of use the ruler. You can kind of see your percentage of how much. So like if you put your stop loss below the pattern, right there is 2.5%. You know, so you can kind of identify that as well to know your percentage, but you would put it below the pattern, okay? Once you continue to see it, you know, the pattern moving and developing, then, or if it breaks out, then you can move the stop loss up. So if it develops into a new pattern, you can move it up, but this case it didn't. So for example, on this, like, okay, this is a falling wedge. You would have your stop loss below. So say you have your stop loss below this pattern here. You're buying in around here as it starts to change direction. You would go ahead and move it up if it broke into a new pattern. I'll give you guys another example here. So let me delete this all off. So typically, if you look at this chart, you can kind of see more of a zoomed out different pattern. So right here, this could be potential triangle, right? The triangle could be here. It's okay, I see this as a triangle now, right? If you're looking at more of like a longer term, right? So if you're trading more longer term, you're gonna look at the bigger patterns opposed to that short, maybe midterm, then you're going to be looking at the shorter ones that I just drew. So for this example here, like you would have, you're seeing it in a triangle, it's an uptrend, you would keep that stop loss below the price action, okay, as it keeps moving up, you can keep kind of moving your stop loss up. And then if it broke out of the pattern, you can then move the stop loss to at the bottom base of the pattern. And then say this breaks out, then you're moving that stop loss to the top of the pattern. And it's still, okay, it's a new pattern, but you're keeping it below. So you're just kind of continue to raise your stop loss to help you in your favor, but make sure it's below the pattern because there can be fake outs and stuff. And then always think risk and reward, right? If you want to do like the 2-in-1, that's a highly one that's recommended. But make sure you kind of find that percentage and what works for you. Everybody trades differently. So if you're like a short-term trade, you might want to be more in and out. Versus long-term trade, you may be wanting to make sure you have that stop loss, okay? So that's a great way to identify where to put a stop loss.